Hey, what's up guys? Welcome back to the channel. Hope you all are doing good. So in today's video, we're going to cover a couple of interesting companies from the alcohol sector, namely Allied Blenders and Tilaknagar Industries. So in today's video, we'll understand why the sector has been doing really well and why it can do well going forward. Then we'll understand a breakdown of the sector. We'll focus on the different segments within the sector that we must focus on, especially the white and brown spirit sector where there's high growth and the growth can continue going forward. Then we'll move on to a company specific analysis of Allied Blenders as well as Tilaknagar Industries. We'll understand different caveats to the business. We'll understand why both of these companies have been doing well and why they can also do well going forward. And towards the end of the video, we'll also look at the con call insights and what are the valuations coming out of the con calls. So on that note, let's start the video. So why these companies have been doing well is because the sector in general has been doing really well, especially the white and brown spirit sector that contains your vodka, gin, brandy, rum, all of that, and not like the Indian made liquor, like your beer, not all of that. We are only talking about IMFL, that is Indian made foreign liquor. This segment has been growing at a good pace over the last couple of years, and the vodka segment especially that has been growing at a pace of 20% CAGR in India. And within that, there's a company by the name of Radico Khaitan, which has a product by the name of Magic Moments, that is vodka, and that has a 60 to 70% market share in the entire vodka industry in India. And that company has created a lot of wealth in the past, and that company has grew at a very good pace and is consistently growing at a very high pace as well. But we'll leave that out of discussion for today's video. We'll only focus on Allied Blenders and Tilaknagar Industry. And another reason why this can do really well is because I'm very bullish on the consumption theme as a whole. And by consumption, I don't mean the normal FMCG products like Hindustan Unilever, your soaps, toothpaste, your washing powders, not all of that. I'm talking more specifically discretionary consumption. So even if you look at it, all of the companies that have shown good results and have done good in the past, be it your hotel industry, that is a part of discretionary consumption, then your alcohol industry, that is a part of discretionary consumption, your EMS companies, all of these companies have done really well in the past 2 to 3 years. So these companies have done really well in the past couple of years, and they can also do well going forward because of first is that the income tax rate cut in the last fiscal. So the effects of those income tax cuts, those effects will be flowing in from now on. People will have a higher disposable income, and people will spend that higher disposable income into discretionary consumption. They won't be like, okay, I've got 10,000 rupees more, let me buy better quality soap, let me buy better quality toothpaste. No, they'll be like, let me have some better alcohol, let me have better experience by staying at a good hotel, let me buy AC, let me buy these white goods and all of that. So that is why this sector can do well. And second is the GST rate cut as well. Not specifically to this industry, but discretionary consumption as a whole can do well. But GST depends on state to state. Whereas in Maharashtra, the tax rate has been increased, but in other states, the prices have been reduced, which will further boost consumption. So we have to remain state specific on that as well. But the thing is that consumption as a whole can do really well. And the companies that we're going to focus on today focus on premiumization. And what I mean by premiumization is that focusing on the higher end of the income bracket. So the two companies that are talking today, they focus on the rich middle class, upper middle class to the rich class to the luxury class, because because the consumption of these because these consumer segments is inelastic in nature. So if you're an economics or finance student, you must know that that demand is relatively inelastic. So even if the price fluctuates by 500 or 1,000 rupees, these people won't hesitate to reduce the consumption or increase the consumption. The demand will remain kind of the same. Same thing with income tax rate cuts. As I have more disposable income, I will be able to spend more money on better quality alcohol, and that is also kind of like a status symbol. But I will be able to spend more money on alcohol, and the companies that are making these higher prices alcohol, they have better margins in that. Specifically, Allied Blenders and Tilaknagar Industries, they have better margins as compared to your Magic Moments that comes under the mass category. We'll discuss all of these terms going forward. But the thing is that consumption as a whole can do really well going forward. Like even if I don't get deep into economics, if you have more money, you will spend it on good quality alcohol, you will spend it on good quality hotels, but not part of the discussion. But you will spend it on hotels, you will spend it on getting more white goods, getting more discretionary consumption. And also there's a trend of premiumization as we discussed, because premiumization, say company has better margins, the consumer also consumer that's going for a premium, he won't mind paying a premium for a better brand, for a better status symbol, for a better taste, in that space. And that is why the companies that have been focusing on premiumization have done really well in the past couple of years and can do really well going forward. So now that we've understood why this sector has been doing good, so why this sector has been doing good and why it can do well going forward because of the consumption theme, we'll now understand a sector breakdown and what are the segments within the sector that we must focus on. So if I have to divide the alcohol industry, I'll divide it into two main parts as we see. First is first is your IMFL, that is Indian made foreign liquor, and then there's IML, that is your Indian made Indian liquor, that is your Desi Daru and all of that. So within IMFL we have your brown spirits and your white spirits, and under brown spirits we have brandy, whiskey, rum, and under white spirits we have vodka and gin. And 70% of the Indian market is whiskey, and vodka is growing at the highest pace of 20% CAGR. And that is why you see that the vodka companies have been doing really well. And the main player within this sector is the Radico Khaitan that has its magic moments, that has been doing really well. So if you see brandy and whiskey, that has been growing at around 6%, and rum can also grow at around 10% going forward. So if you see white spirit has been doing good, but the brown spirits and all of that can also do well going forward. So in this sector, we only want to focus on the IMFL because that is where growth is, and we always want to chase growth. And this brings me to the next part, that is thumb rule to spot winners within the sector. So first is their focus should be on creating your own brand, because people are always willing to pay a more hefty premium or pay that extra rupee for a company that have a better brand. Then we have your increasing share of IMFL. Higher share of expensive liquor will mean better margins. That will mean like better demand, inelastic demand, as we said. Then next is premiumization, introducing higher price bottles. So when we look at allied blenders, we'll understand why allied blenders has been doing really well and it can do well going forward because it is introducing higher price bottles. But the thing you need to understand is whenever a company introduces a new brand, a new bottle, or a new product, the main indicator of whether the product or the service is doing really well is sales growth. So we actively need to track the sales growth of these companies to see whether there is actually demand or whether there is actually just the product can do well going forward. Because when we talk about the con call, there is a product in Allied Blenders product name is Iconic White that has the potential to be the next magic moments as well. Not the next magic moments, but similar to magic moments in the premium and above space. So we must see that the company is focusing on creating brands. It is increasing share of IMFL, premiumization, then it is also backward integrating to reduce costs and control quality. And a thing about costs is that it is a 50-50 split between your glasses and PET bottles, and your 50% is your scotch that is used for blending, your green molasses, your ENA, extra neutral alcohol, all of that. So we must see that companies that have been backward integrated into any one of these can have better margins, they can have better quality, they can have better cost control, optimizations, and all of that. And then distribution should be pan India and export, and getting the right product portfolio mix. So these are some of the key pointers that we must see in a business. And if a business is following all of this, then the business, we can say, is structurally heading in the right direction. It is just a matter of time before we see the actual results. So now this is the main breakdown of the sector. So first we have pricing of alcohol. So first is your mass premium category that starts from 350, that has your bottles like Officer's Choice, Old Monk. Then there's the prestige segment in which a bottle costs from 350 to 800, that has your Royal Stag, Imperial Blue. And then there's the premium segment that ranges from rupees 850 to 1750, Blenders Pride, Sterling Reserve. And then there's super premium segment that each bottle is around 750 to rupees 3500, that has your bottles like 100 Pipers 12 years, Teachers 50. Then there's your luxury and ultra premium segment that has bottles north of 3500 rupees, for example Johnny Walker Blue. And there are certain caveats to these sub segments. So first is that the premium and above. So if you see in premium and above, it is low volume and it has a high contribution to profits. For example, premium and above contributes 10% to volume but contributes almost 42% to the profits of Allied Blenders. This is straight from the con call. And PNA also has better gross margins, as we mentioned earlier. So if the company introduces higher price bottles, we see that volume growth might seem a bit less, but profit growth is also profit growth far exceeds this number. And that is why you see, if you look at Allied Blenders, it has shown tremendous operating leverage. And that is why if you see in Allied Blenders, company has shown revenue growth of around like 20, 30, 40%. But if you see, profit growth has always been in triple digits or sometimes even in 4 digits. And if you look at it, mass and prestige, mass, premium, and prestige, that are usually cash cows that have high volumes. So understand this. Even in the sales growth video, I said So mass and prestige, these are cash cows that have high volume numbers. So these will add to the component of sales growth, right? Volume growth within the sales growth segment, and then PNA growth, that is the premium and above, they will add to the top line of the company. So we need a mix of both. We don't just want like companies growing volume at single digit, but growing profit at high pace, or companies only focusing on high volume and not focusing on profitability. We want a right mix of both. So that is what we mean by getting the right product portfolio mix, is that there should be volume growth as well as value growth. And value growth will come from what? Premium and above. Volume growth will come from your mass, premium, and prestige segment. So that was a brief breakdown of the sector, the different price points within that. And whenever, generally when you're looking for companies, we want to look at companies in which the share of premium or super premium, luxury, ultra premium, that share is increasing, because it has first better margins, demand is inelastic, and all of the reasons we discussed earlier. And if you guys are liking this video so far, make sure to like and comment down below what is your favorite part of the analysis. So allied blenders, it is, in comparison to Tilak Nagar Industries, it is a more diversified player. It is diversified across different products, and it is also diversified across different geographies as well. So if you look at it, pre-IPO company used to make single digit margins, company had a lot of debt. And if you see post IPO, the company has been making double digit margins, and company is further guiding for margin improvement. Company has seen tremendous operating leverage. When you look at financials, we'll understand the kind of operating leverage company has seen. The profit growth is much faster than their sales growth. Increasing share of premium and above, as we discussed, this is one of the main things that we want in a winning company. That premium and above share has increased from 25% to 46%, and now increasing to 56% as well. So this increasing share of PNA, that is the result why we have seen the profit growth. That is the reason why we have seen profit growth is much faster than the sales growth. Then companies also backward integrating. To make its own PET bottles and your glass bottles. So, and as I mentioned, it is a 50-50 split between your grain molasses, your ENA, your Scotch whiskey. Then it is backward integrated. Then there's 50% cost for your glass and packaging. So company will have control over almost 50% of the cost. And plus, with the new UK FTSE deal that has been signed, the Scotch that has been imported, that will basically, the import duty was 150%, that will basically get cut down to 75%. So the company is also seeing margin benefit from that as well. And companies focusing on premium and super premium segment, like almost 11 to 12 bottles have been introduced. When we go to the presentation, you'll understand in detail which are the brands. Companies constantly launching new brands and bottles and expanding in different segments. It is entering new geographies and state. So if you look at it, Allied Blenders, structurally the business has been heading, and it is heading into a right direction, and it covers almost all of the points that we saw in the winners section. Company ticks almost all of the boxes, right? So if you look at Allied Blenders portfolio, in the past it was kind of like focused only on your mass, premium, prestige and premium segment. But if you look at it recently launched, if you look at this recently launched brand, company has been foraying vastly into your super premium to luxury with the Russian standard vodka, Zoya gin, different flavors, Russian standard vodka, Woodburn's whiskey, the gin, then whiskey as well. Then there's the super premium vodka. So you see that company has been moving its portfolio away from the mass and mass premium segments to the super premium and luxury segments. And this is what I meant by getting the portfolio right, because if company can get the good mix of having the volume growth from your mass and prestige segments, then there's the value growth coming from premium and super premium to luxury, then company will be in a sweet spot over the next couple of years. So if you look at it, let's talk about the brands, right? If you see Officer's Choice Whiskey and Officer's Choice Blue, this is one of the trademarks of the company. But Officer's Choice Blue was not doing well in Delhi because of policy restrictions, but it is going to do well going forward. The prestige and above segment has been doing really well for the company. Like if you see in Q2, the growth was 46.9% and outperformed the industry by a big margin. So you see the prestige and above segment that has been doing really well for the company. And another important update is that the iconic white whiskey that I was talking about earlier, that has the potential to become like one of the leading brands for the company. Like if you see Magic Moments, that became one of the leading brands for Radeko Khaitan. So company seeing that your iconic white whiskey, that has the potential to become like one of the leaders for this company, because even in Q1 it has sold 50% of the cases that it sold in the entire FY25. And another key fact from the company is that all of the super premium and luxury are managed under a subsidiary, that is Allied Blenders Maestro. So in that company, every 1% volume contribution leads to a 9% value contribution for the company. So the main goal for company in Officer's Choice Whiskey, that is this brand, is to, because this is one of the cash cows of the company, is to maintain market share and increase gross margins, because it provides gross margins north of, I think, 40-45%. And plus, if you look at it, Sterling Reserve V7, that is a one bottle that has not done so well going forward. So company basically wants to stabilize it, improve packaging, and then company is expecting that from H2 onwards we can see better results from this brand. And this is basically the strategy of the management going forward. It wants to expand into non-whiskey whiskey. We'll look at this in detail in the con call insights, but you see that structurally the business appears to be heading into a right direction. Some of the backward integration that the company is doing. So as I mentioned, company is manufacturing its own PET bottles, and by Q2 of this and by this quarter Q2 FY26, the factories will go live, and with that company will have cost control over 50% of its costs. So that is a good lever for margin expansion. And plus it is also expanding and setting up an ENA distillery, that is another 50, that is a big part of their raw material. And also with the UK FTA deal being signed, then that can also lead to uh, margin expansion. And with all of these reasons, the company is guiding that it will be able to do almost 17% EBITDA margins by FY28. That means after the next 3 years, company will be able to do almost 17% margins from the current 13-14 margins. And then also important update from this quarter is that the company is also expanding into two very high growth segments. So first is your brandy segment, and second is the super premium or luxury vodka segment, as we saw in the presentation as well. So in the brandy segment, the company is launching a new bottle by the name of Golden Mist brandy. And brandy, it is a kind of like concentrated, very concentrated in the southern parts of Karnataka, Telangana, Andhra Pradesh, all of that states. And when we look at Tilak Nagar industry, we'll understand why Tilak Nagar industry has been doing really well. So back to Allied Blenders, it is launching these new brands. It is launching new brands and diversifying into high growth segments. And the reason for diversifying or foraying into this segment is because it has the ability to show double digit volume growth, and it has very high margins as well. And company is targeting that it will be able to have double digit market share, and company is fairly confident of that. But I think that this seems like a bit of a hard task. I wouldn't say impossible. That is kind of a hard task, because Tilak Nagar industry, it has almost like 80% market share over the brandy segment in South India. So it will be a difficult task. But the main thing to track is that sales growth. If the sales growth of Golden Mist, that is your brandy, that is more than Tilak Nagar Industries, then we can see that the market share is slowly transforming to Allied Blenders. And if that happens, that'll be one of the biggest growth triggers for the company going forward, because as I mentioned, it will have double digit volume growth as well as very high margins compared to now. And then there's the vodka, that is super premium luxury, as we saw Russian Standard, all of these vodkas. So even these vodkas, the companies targeting double digit market share, companies saying that double digit volume growth and very high margins. And one thing to note, that it is not competing with your brands like Magic Moments, that is a mass premium. It is competing with brands like Absolute, your Grey Goose, all of these thoda sa premium type of vodka brands. So that was it for Allied Blenders, because you see all of the reasons why the business has been structurally heading into a good direction. And even if you look at the income statement, the company has been doing really well. And even if you look at the income statement, the company has been growing volumes at a very good pace. And plus, even if you look at the profitability, company has been focusing on profitability. Like you can just see the kind of the numbers that the company has been presenting. So the business appears to be structurally in a good tailwind. But with that being said, let's look at the valuations, because valuations are what decide your returns along with your increase in profitability. So if I can directly quote the management has been saying that it will be able to increase its volumes by mid double digits. So we can assume around 15%, and value growth can outpace that volume growth. So we can assume like a conservative 18% margins if you want to stay a bit on the safer side. So if we assume like company did around 3,520 crores of revenue, like if we add that plus how much 18% revenue growth, we get almost 4,153 crores for the entire FY26 season. And plus if we assume that company has a PAT margin of 6.5%, company is currently doing around 5%. So if we assume that company can do like 6.5% PAT margin, we multiply that by 6.5%, and we get a PAT of almost 270 crores. So if we divide the current market cap of the company by the profit or the PAT that you can do 1 year forward, we get almost 60 times earnings. So based on that, the Allied Blenders, that is not cheap, But if you are getting like a 20-25% growth engine at 60%, I wouldn't say it's the best deal. I would suggest that if you're an investor, I think you should continue holding. I don't think there's any reason whatsoever to exit. But if you're looking to enter now at a all-time high, I think it would be better if you wait for a while. If you see a bit of correction in the market, if you see a bit of correction in the stock, you can buy it. But if I was an investor, what I would do is that I would like at least put in some money. I would put in like 0.5% of my money because I want to actively track the stock and I want to increase my exposure anytime I get. So I wouldn't say that this stock is good for entering at this point. I would just say kind of like a wait and watch. But the company has a very good potential, and if you're an active investor in this, I would suggest that you continue holding the stock. So now moving on to Tilaknagar Industries. Tilaknagar Industries, that is a more concentrated player, both product portfolio wise as well as geography wise, as compared to Allied Blenders. We saw in Allied Blenders it had like different products, it had different states as well. Whereas Tilaknagar Industries, that is a purely brandy focused company, but it is now diversifying. So like why the company has done really well is because 91% of its sales or its revenue comes from sales of brandy, and 86% of it comes from the South India, that is your regions like Karnataka, your Andhra Pradesh, Telangana, all of that states. And another an interesting data I want to show is that if you look at which part of India consumes the most alcohol, that is basically your states like Karnataka, Tamil Nadu, Telangana, Andhra Pradesh, South India. Especially that is the reason, that is the region where Tilaknagar gets most of its sales, and that is why if you look at Tilaknagar Industries, it has shown tremendous growth over the past couple of, like if you see post 2020, the company has shown tremendous growth, and if you see that profitability has also been increasing tremendously. And if you see, this is again one of the structural changes in Tilaknagar Industries. After like 2020, it started focusing from pure play volume to focusing on value growth as well. And as a result, company has shown both volume growth as well as company has shown considerable profit growth as well. And company also has a very asset light model of like almost 70% of its product portfolio company doesn't manufacture on its own. Company does contract manufacturing, so another party manufactures that for the company. So company doesn't have a lot of asset heavy model. And coming to the con calls of the company, and companies also diversify, and similar to Allied Blenders, companies also diversifying into your gin and also into your vodka, that is high growth segments. But the thing is even in Allied Blenders, I said that companies diversifying into brandy and super premium vodka, and this is also diversifying into super premium vodka and your gin. So it will be interesting to see which company can get the most market share. And the most important indicator is the company that can grow its volumes at a higher pace, its sales at a higher pace. That is the company that will continue to gain market share. And also another thing is that Tilaknagar, it has a very strong brand, the Mansion House Brandy and the Courier Napoleon, that has a very good strong brand in South India. So it will be interesting to see how Allied Blenders can establish its own Golden Misty brand, Golden Mist Brandy in South India. Because as you said, the focus should be on creating a brand, and brand plays an important role region wise. So if you look at it, actually in the con call as well, most of the participants were asking questions about the Imperial Blue acquisition. That is like a very big acquisition, I think almost 4,100 crores, like almost half of the market cap. But in the Q2 con call, we should see like the deal has been finalized, but during the Q1 FY26 con call, the deal wasn't finalized yet. So in this con call, hopefully you will understand better information about the acquisition, like how the acquisition going to affect the financials, how are the acquisitions of Imperial Blue, what is the whiskey segment, what are the margins on a consolidated basis. All of the questions, they will be answered in the Q2. So we can't really do much, but just company has given us a valuation. So company has given a guidance, so we can do a valuation exercise on that. But that will be all. So if I can directly quote the management has sent revenue in the mid to high teens. So same as Allied Blenders, we'll assume 18% growth. So complete around 1400 crores of sales. So 434 crores of sales plus almost 18%. Then we get FY26 sales of 1692 crores or almost 1700 crores. Even within that, if we assume like a 14% EBITDA margin, which is conservative, and this is where the striking difference between Allied Blenders and Tilaknagar Industries come in. Currently, Allied Blenders is doing 6% PAT margin, whereas Tilaknagar is doing almost 14% PAT margin. But it'll be interesting to see how that PAT margin is getting affected, because company is diluting equity, company is also taking on debt, so the interest cost might go up. And plus, of going forward, company will also be eligible for tax aid. Like even if you look at it, company currently has 0% tax rate because company was not profitable. But I think from Q2 FY26 company will also have tax rate of 25%. So it'll be interesting to see how company can manage its PAT margin and profitability EPS after that. But for now, for valuation estimates, we can assume like a 14% EBITDA margin. Like I'm not accounting pro, so I don't really know how tax rate will affect PAT margin. But considering the steady state business, company can do 16% EBITDA margins. That translates to around 14% EBITDA margin. Then we get almost 240 crores of PAT. And if we divide the current market cap by almost how much? 240 crores. We get a valuation of almost 37 times earnings. And yeah, 37 times for a 37 times earnings, 38 times earnings for a company that's going 25 times. I think that's approximately 1.5 times PEG ratio. So Tilak Nagar appears to be the kind of like the more not, I wouldn't say undervalued, the more fairly valued out of these two. But the thing is, Allied Blenders has a lot of growth drivers for why the business can do well going forward, and even Tilak Nagar Industries has as well. But Tilak Nagar Industries ka one of the most important factors to watch out is the Imperial Blue acquisition and what is the management commentary coming out after Q2. So moving towards the conclusion of the video, what we saw in the video is first we saw why the alcohol sector has been doing really well in the past and why it can do well going forward. Then we understood a sector breakdown, why we need to focus on IMFL. Then we understood a price point breakdown of alcohols. Then we saw Allied Blenders ka business. It is structurally heading into the right direction. It is increasing new bottles and plus backward integration. And basically Allied Blenders ticks all of the boxes of the winner segment. Then we saw Tilak Nagar Industries. It is a more focused player, a more concentrated player that is diversifying. Both of these companies are diversifying into high growth segments where there are better margins, there is better growth. So it'll be interesting to see which company can win in that segment. Then we also saw valuations like Allied Blenders appears expensive, but it is a higher growth engine, and it'll be interesting to see if there is any upward revision in guidance in Q2 FY26 going forward. So that was it for today's video from mine, guys. I hope you liked the video, found it informative. And if you guys found it informative, make sure to like, comment and subscribe to the channel, and also share with your friends who are interested in learning more about this stuff. And I'll see you guys in the next one. Thank you.